Another wild day in the markets today while Bitcoin kind of hangs on and really is just kind of remaining boring, uh, fooling everybody, waiting for these huge, gigantic moves. So let's see what's going on. The markets again started out up with the futures 300 points, ended up down 400 points. Yesterday, the market started down, ended up. So we've got some crazy, wacky up-down days going on in the markets here. Why is that? Because we're in a bear market, and that's what happens in very unique, unprecedented um, times that we're in with distorted levels of liquidity in the markets and then lack of liquidity in the treasuries and things like that. And let's take a look at that. The bonds are over 10 years over 4%. That's going to put a big dent in the interest rates and continue to impact housing and mortgage rates as they get up over 7%. So we've got big corrections going on in the housing market as a result of that. The 2-year is up in the mid fours. So the world of interest rates and credit are going to be impacted greatly by this. Let's take a look at the markets here. And here's the Dow Jones. This was yesterday's big move. Kind of an interesting chart that this thing is developing now, where this is usually a 2 or 3 day move yesterday and one day, and then a big down unwinding of that again today. A lot of algorithmic technical trading going on with the formulas getting hit and doing automated trading. And then here's Bitcoin on the daily, deviating from our downward trend line here, now kind of marching along on that 2017 all-time high, previous all-time high, still kind of testing that up and down, up and down. And there's a lot of open interest. So a lot of people have been anticipating a big move in Bitcoin either way, but Bitcoin has been just remaining stable here, a little bit up and down when it got up to 25,000 here and down to a low in the 18s in the lower ranges now, trying to hold that $20,000 range, but been kind of stable while the traditional markets have been kind of going nuts and declining. So the real test for Bitcoin is coming because markets are going to take another leg down. We haven't seen capitulation. We haven't seen a financial accident, and there will be one coming, and it's probably going to be in the credit markets or related to treasuries. So it's coming, and we'll just have to wait and see what happens. And that next leg down in the markets, big drop, kind of like we saw something over here as what capitulation looks like right in here of what capitulation looks like. We're not there yet. This is a steady unwinding of levels, repricing. Earnings were kind of mixed today with banks. We've got corporate earnings coming out here in the next couple of weeks. So we'll see how that impacts markets. And consumer spending came out, and it's relatively strong considering. So that's why inflation is stubborn, because people are still spending and they're going to continue to spend. And the job market is still relatively strong right now. So interesting time in the markets here with the Dow. So kind of testing that the Dow still sitting on that previous pandemic high, NASDAQ not quite there yet, and the S&P still above the pre-pandemic high, but has taken out that June low, is kind of continuing its way down. NASDAQ still well below the June low, and the Dow well below the June low right now, or not well, but below the June low as well. So we've lost June lows. Markets are kind of wrestling with that. Some of these, obviously retracement levels from the pandemic low. I think the Dow's playing right there with that 382. The NASDAQ, let's see where the NASDAQ is holding. NASDAQ is holding on the 618, and the S&P, I believe, it rejected right at the 0.5 yesterday. So yeah, right here on the 0.5 that it bounced off of yesterday, and kind of holding now just above the 0.5. So interesting Fibonacci levels being held as support and resistance here as the markets kind of continue their way down for these next legs as we wait for the damage that the Fed's going to do in November, first part of November, when they raise interest rates again, probably at this point, unless something changes in the financial markets to the downside. They're definitely most likely going to raise 75 basis points again, because what they're doing in their minds, according to their data, has not had an effect on the markets. And one of the areas, again, like we talked about, is food, energy, rents. Energy is going to go up. Food is continuing to go up, and rents in some markets are starting to come down a little bit, but they're coming down from way high distorted levels. so are housing prices. So even though we're seeing prices come down, they're still higher than where they were before a year or 2 years ago. So, you're getting corrections, but the corrections in the price declinations are still higher than where they should be. So that's what's weighing on the markets. That's kind of what the Fed's looking at. And consumer spending is still strong. The labor market is still strong. So there's a lot of work left to do that the Fed has to do. So they're going to keep pushing until they break something. And then the question is going to be, what do they do? And any hint of a pivot, any hint of a pause on the Fed's part, while we're going through this, is where you're going to get those real big, violent market rallies. So those will be your good buy signals, and you can get a lot of action out of them, but they will unwind until inflation comes down. So you can't expect a full market reversal, new all-time highs, or anything like that until inflation is in check. And what I mean by that is like 4%, 3%. Inflation starts coming down, moving backwards, then the markets can kind of continue on, because there's a lot of capital out there waiting to be reallocated back into the markets. Investors need to allocate, pension funds need yields, life insurance companies need yield, sovereign debt funds need yield, investors need yield, 401k, things like that. So there is still a lot of capital that can be put to work in the markets once the dust settles. So hang in there, be patient. Bull market's coming. Bear market's not going to last forever. Good times never last. Bad times never last. It's the business cycle of the markets. We're in a down cycle. We're in a bear market. Got to get through this. Let the dust settle. And when it does, it's going to be back to the races, and it's going to be a lot of fun. And that's where the big generational moves will be made. These are the things I'm looking at. I'll see you in the next video.